Hello traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for June 23rd, 2024. If you're jumping into this video and you're like, wow, that's clickbaity. It is. I did it on purpose. If you've been listening to this show for the last 7 years, 8 years, you know I don't typically put clickbait stuff like that, but I meant it. You know, we are seeing a really key reversal. And that chart that you saw there in that thumbnail is NVIDIA. So I'm going to talk about that. I'm going to talk about the importance of this reversal here in just a few minutes. I also want to say, if this is your first time listening to the week ahead video, it's chaptered. So if you watch this maybe about 2 or 3 hours after it's been released, there's chapters so you can scroll through. Remember at the very end, I talk about what the best trade setups were for this week or were for last week. I reviewed the ones from last week, and then I talk about the best setups for this week. So don't make sure you don't miss that, especially if you want to skip over parts that are irrelevant to what you're doing in the markets. I want to thank everybody for taking the Forex Analytics survey. You know, if you logged in to the dashboard and you see the survey that popped right up, and we got, I've been really for the last few days combing through all of the comments, and I realized that, you know, just you know how intimate you guys are with our community and Forex Analytics. So thank you so much. And for those of you that have entered into that, we will be doing a giveaway for a free trader funding program, $25,000 account assessment that will be happening here in the next week or two. I just want to make sure that I give enough time for everybody to take the survey. So if you have, thank you very much. If you haven't, and you're going to do it, we appreciate your thoughts and insights on how you're viewing the tool, how you're viewing the community, and all of us analysts at Forex Analytics. So thank you very much. Really, really, really do appreciate it. Sorry, I keep hitting my microphone. All right, let's talk a little bit about the thumbnail. Generational bearish reversal. Well, is it really when you look at NVIDIA? The one thing I have to say is, yeah, I actually think that the top near-term top for NVIDIA is in. I do believe that. And we hit a 261% extension of the latest down move. Obviously, this is very extended, divergent relative strength on a weekly basis, yada, yada, yada. Now, your first, and by the way, that candle is a dark cloud cover, especially if we get a bearish candle this next week. It's going to be a dark cloud cover, solidify the reversal. Great. If you trade NVIDIA, fantastic. You know what to do. Now, a lot of people will ask me, you know, if this is it, since NVIDIA led the market higher, is this going to mean a broad market reversal? The answer to that question is, I don't know yet. And a lot of times I look at leadership in the stock market, kind of like generals, or in if you're in the military, you have a chain of command. If you're in combat and your platoon leader goes down, well, one of your squad leaders are going to step up to be the new platoon leader, right? Or, you know, and that's just kind of how things work. So we call that in the markets rotation. So if NVIDIA is reversing, and you guys have seen the semiconductor index, let me go ahead and bring that up. And by the way, we have Nick from Trading Analytix. He will be talking about this as well. He'll be giving you his own iteration, but I want to just show you big 161% extension from there. Now, obviously, we overshot it the last time through the long-term 161% extension, and we ended up going higher. Same thing could happen here. We could end up going higher as well over time, but you can see very divergent relative strength, so on and so forth. Semiconductors could reverse, and you can see actually a big surge higher in healthcare, in utilities, in different parts of technology, banking, finance. Maybe rates come down. Bank stocks start rallying. Who knows? So just because leadership is reversing, which happens to be a semiconductor index or NVIDIA, does not mean necessarily the market is done for. But I will say that our radar has to be up, and there's a couple things that you should be looking at especially intermarket correlations, which I feel are very important. And I'm going to talk about all these in a great detail. But you got to look at, the 10-year. You got to look at bonds. Bonds are getting really close to breaking out. No one thinks they can break out, and the market is aggressively short the bond market. So there's that. There's positioning, right? So if bonds rally, well, how about if the dollar index rallies? We're going to obviously talk about the dollar index quite a bit as it's approaching major resistance. And then you got gold. I mean, gold, and I'll just pull this up really quick. You can see gold is just maintaining near its all-time highs. It's not selling off, and you could argue that this is just a bullish consolidation up here. So, when you see gold, the dollar, bonds, rallying, and bonds are going up, yields are going down, and you're like, wait a second, the dollar's still rallying. That's usually some risk aversion. So, I'm just gonna give you guys a warning. Yeah, the generals looked like they're shot, wounded, maybe even killed. Your semiconductor index and your NVIDIA, those types of things. But that doesn't necessarily mean the market's ready to die. But if you start seeing some of these other things happen, emerging market currencies, if they start to weaken, that's another thing that you should be looking at. Then we might get a significant and more long-lasting pullback than just your garden variety 5% reversal in the S&P. But the good news is, if you want to hear our daily analysis, what I would be doing is going to our free shows. We have one early in the European hours. Well, not early in the European hours, early for us in North America. It's called the Flow Show. It's free. The Face Show is also free. We have other shows like the Morning Edge and the Daily Roundup that are more member shows. But for free shows, we have the Flow Show and the Face Show. And the Face Show, you're going to hear me every single day with the rest of our team talking about current what's happening for the day. Then also you can find a Trading Day Ahead podcast on Spotify, Amazon, and Apple Music. So for those of you that are looking for a podcast type version, shortened version of everything, you can do that as well. All right, let's go into this week, because this week is going to be a pretty busy week. We have, well, first of all, I'm just going to say we still have a couple of central banks that are meeting. We have the Riksbank, and we have the Banxico, which is meeting, which we're going to talk about the dollar mex here very shortly. We also we have PCE, some inflation coming in from around the globe. So I'm going to be going through the calendar and some of the specific charts of their currencies relative to the calendar. So if you want to skip through, you can go ahead and forward through this. All right. So first of all, let's talk about the yen. And that's just because Sunday night we have the BOJ summary of opinions, which may not be a market mover. But what I have to point out is something we've been talking about here is a break below this channel support would be bearish. Yes, that's still the case. But the fact of the matter is the dollar yen and the yen specifically weakened across the board going into, and you can see that this is the yen futures, weakened across the board going into the weekend. Now, this is the market really testing the BOJ and the Ministry of Finance, seeing if they're going to intervene again. There's a lot of speculation that they will not. So that just allowed the market to press on option expiration day really aggressively. Now, if you don't, and I talked about this last week, and if you're not familiar with it, this is a Wyckoff setup. Now, I used the dollar yen last week, but I'm going to use just the 6J, since we can do the accumulation pattern pretty well. So you'll see that you had the selling climax here in the yen. Let me get rid of myself. You guys don't, I'm trying to get out of the way here. I forgot my video was up. Okay, so again, this would be a Wyckoff accumulation pattern potential. And same with there's some of the yen pairs, dollar yen. Maybe not so much. I would focus more on what's happening with the yen as a whole. Now, you'll notice that this is the selling climax. The selling climax is going to be the same as over here. Now, you have to bear with me. I'm going to do a little bit of drawing with you guys. Okay. So You have the selling climax here, which would be from a chart perspective. There's your selling climax. Notice the volume. Notice how big the volume was, right? Now you'll have this accumulation, which is this accumulation right here, right? Accumulation. Now we're heading back down again, and this, depending on what happens early in the week, we can have a low volume. See how the volume is so low? Low volume. Failed sell-off. So if we actually, don't hit new lows or maybe even hit the 161% extension here, but then reverse, then you're going to have a classic Wyckoff accumulation setup reversal. So instead of watching the dollar yen, because the dollar yen might be a little skewed because of what's happening in yields, what's happening in Europe, but if you want to really look for a Wyckoff accumulation pattern, look for it in the 6J. That's what I'm going to be focused on. And keep in mind, let's go to the 6J. We're approaching that 161% extension of this wedge. So this is going to be your first target, downside target anyway, before you start looking for a reversal. So if you are looking for a yen reversal, pay attention to the futures contract, the 6J. Some of you that trade in the U.S. and trade futures, you might be looking for a reversal higher in the yen from a retest, or maybe a brief new low might give you that reversal. So just keep that in mind, especially if you look around at some of these yen pairs. I mean, they are so dang strong. Like look at the Aussie yen just breaking higher, Kiwi yen breaking higher. It's obviously, we haven't looked at that in a while, so I can delete all this stuff, but you can see the Kiwi yen breaking higher. Canadian yen's on a rampage right now. So you just have all these yen pairs really moving. Swiss yen, even after last week's Swiss National Bank surprise cutting in the market, Swiss yen is still back up towards these all-time highs. So, or not all-time highs, but multi-decade highs. So just keep an eye on them. All right, that Sunday evening we have the BOJ summary of opinions. Monday we have Mexican inflation. Now, if you guys remember the dollar mex, we've been talking about that quite a bit, and we have Banxico this week. And going back to last week's drawing, we are closing in on that 18 level, and you saw I drew this little thing here, this little circle around this, the 18 to 1780 as being really key support. Well, I didn't know where the high was, so now we do, right? Now that we know where the high is, the 38% retracement of this entire move is right here at 1695. So let me delete that, and I'm going to redraw what I want to show to you, because I think from here, if you're looking for longs in the dollar mex, now I've updated you guys every single week on the US dollar Mexican peso for the last month. This is an example of a Wyckoff accumulation pattern that we identified several weeks back on the week ahead video. Some of you were long. It made almost my quarter really in that one trade, and this is a big one. When it broke out following the elections, I showed you guys that right after the Scheinbaum win. Now, in this move, we are looking for low volume sell-offs, which you're not going to see necessarily here in the FX market. But what we're doing is we're pulling back, and we're in this point of the Wyckoff stage. So what we're looking for is a move back up here again. Now, remember, we do have not just the Mexican inflation data first thing in the morning on Monday, or first thing in the week in the morning. We also have the Banxico meeting, which comes in. Let me double check that. I believe it's on Banxico is on. I've got to double check my notes here. Sorry guys, I had to jump ahead for just a second. Banxico is. There we go. It is actually on Thursday. So don't forget that. Banxico on Thursday. All right, continuing on. Let's continue on with their analysis. So anyway, Mexico inflation, dollar mex is coming down to a 38% retracement around this 1795 level should offer really, really strong support. Okay, Monday we have German IFO. I do want to talk about the euro this week, and we're going to talk about it quite a bit because we have the French elections coming up next weekend. So when you're talking about the euro, you notice how we're coming into very critical support. Rallies are being sold, and I would expect that to happen once again ahead of these elections. So what I would be looking for is maybe a move back up towards 107.50 for an eventual break lower in the euro. Just remember, we have German IFO on Monday morning. Monday night, we have Bank of Japan core CPI. I already talked about the yen, but just to reference the yen really quick, you can see how the dollar yen was really pushed right into this major, what I would consider major resistance around the 160 level. And, the dealers were just running amok in very low volume and volatility environment on Friday, pushing the market as far as they could. So as we trade around 160, there are intervention risks, obviously. But Monday night we have core CPI, and I have the K-Man, who's one of our analysts on the Flow show, and he also comes on Face, and he's in the Forex analytics community. He mentioned that this move has been so aggressive that the Ministry of Finance or Bank of Japan could really use some strong words or potentially intervention come Sunday night or Monday morning in Japan. So just keep that on the radar. All right, moving right along. On Tuesday we have Canadian CPI. I've been a little skeptical about the dollar Canadian and how to trade it. As you all know, I think really critical support is at the 136 level. It does look like to me that we could potentially make a move towards this level of support right down here, which in this case would be about 136.40. And now if we break below 136.40, then obviously 136 comes into view. So just keep that in mind when you're talking about the dollar CAD. I really have the biggest problem with the dollar CAD, as I've explained on the Face show, that Canadian exposure is very hedge funds, fast money, institutional types are very short the Canadian dollar. So even if there is, like in this case, if we're looking at CPI, if the CPI comes in strong, you might get traders getting out of Canadian dollar positions on any type of strong data, just because the market is so aggressively right now. They're so aggressively short that strong data might provoke some of them to get out of it. So, I have a feeling at this point the dollar Canadian is probably going to be back to at least 136 before eventually making its move higher, just from a positioning standpoint. So I'm more concerned with it trading down to here than it to trading up to here near term. That doesn't mean it won't. I'm just saying that I've got my own personal conflicts, especially with positioning right now. All right, continuing on. After Canadian CPI, we have the Conference Board Consumer Conference here in the U.S., Case-Shiller House Price Index. I'll look at the dollar index in just a few minutes because I want to cover a couple other charts. Tuesday night or Wednesday morning, if you're in Australia, you have the Australian CPI. Now, the Aussie is obviously range bound. You guys know where the breakout points are. The breakout points are 67.15 and down below the 38% retracement at 65.80. We've talked a lot about that over the last couple of weeks, and that dollar Canadian's been in, Aussie dollar has been basically in this range for the last 2 months. So we know that a breakout above resistance or below support should provoke some sort of movement. One of the reasons why I think the risk is mounting for a downside move, or that means US dollar strength, is because what is happening in the Eurozone, we have an upcoming election in the UK, what's happening with the dollar yen. Those are some of the reasons why I believe that we're more likely to see a downside breakdown in the Aussie. And then plus, if risk aversion starts to pick up, you might have a dollar liquidity issue where the dollar starts to pick up some strength. Nevertheless, we are in the middle of the range, and potentially the Aussie CPI could put us at the upper or lower end of this range following Tuesday night or Wednesday morning in Australia. Moving right along on Wednesday morning here in the U.S., we have new home sales. I actually, let me go backwards a little bit and just say that the previous day we have Case-Shiller House Price Index. The house price index is important. New home sales important as well because, and let me just go over to the dollar index really fast, and we can do a little bit of analysis here, but I really want to stop in the dollar index, talk a little bit about housing here in the U.S. Americans, it's kind of like the real estate, not real estate. I'm talking about real estate, but like the stock market. I've heard numbers from 50% households own, the stock market. The other 50% do not. You could probably say, more than that. If I've heard the number at some point, and I can't remember what it is, but out of all Americans, more than 50% of Americans own their own home, and they have a lot of wealth stored in real estate. So when you're looking at a house price index, the house price index has more to do with what consumer sentiment's going to do, right? So if house prices are going up in value, people feel more wealthy, they're going to spend more, it helps support the economy. House prices start going down for multitude of reasons, whether it's higher rates or whatever the case may be. People feel less wealthy, they spend less. It's just psychological triggers, right? When you're looking at new home sales, which happens to be on Wednesday morning, that more is directly affecting the direct economy, because if there's more new home sales, more building, obviously more people are working. You got, carpenters and builders and roofers and finance folks and lenders and realtors working more. So obviously new home sales matters more from a economy productivity standpoint. The Case-Shiller House Price Index the day before is going to have more psychological effect on the consumer. So they affect the markets a little bit differently, but just, we obviously need to be paying attention to all of that data. Everybody knows that the dollar index is approaching really key resistance. That probably will have more to do with the European elections next week than what we're getting as far as data goes. Thursday, we do have the Riksbank decision, and this is not a currency that I follow all the time, but we can look at the US dollar, Swedish krona. We haven't looked at it in quite some time, and I would probably argue that we're probably in more of a range. I guess that's the best way to look at it. This is a 78% retracement. Yeah. So, I would, if you're trading around the Riksbank, I don't really have any view here. I'd probably be looking at this range. You get above the 200 DMA, starts to turn bullish, especially if the dollar index is breaking out and the Riksbank is more dovish. They're expected to keep rates unchanged, by the way. But if they're more hawkish, then we might break down towards this 78% retracement that seems to have held us before. So just keep in mind that is happening on Thursday morning. Also on Thursday morning, we have the South African PPI. Now, the U.S. dollar, South African rand, you could argue that we're breaking triangle support. Yeah, maybe. Or is it just really just a symmetrical triangle? It's hard to say. It's hard to gauge. One thing that I will say with the U.S. dollar, South African rand, is we pushed fresh lows here, right? And we're holding below them. But you'll notice there's a very, very big divergent relative strength. And if the dollar starts picking up strength across the board, you got to watch this dollar South African rand, because we start breaking back above 18.20, which is basically right here. That's going to fuel the fire for just a nice little squeeze in the dollar rand. Again, producer prices on Thursday morning. Thursday morning, what else is happening Thursday morning, and we should talk about this, is sterling. We have the financial stability report that's being released, but Bailey, Bank of England's Bailey, will be speaking and having a press conference about the financial stability report. The thing about, you'll notice sterling here, it actually hit the 50 DMA, right? But more importantly, and let me pull myself off of here. More importantly, we got a bear flag pattern. You'll notice it right here, and I think we've discussed the breakdown of the channel. Over the last couple of weeks, we broke that channel. Now you have a bear flag pattern that points for much lower. So that bear flag pattern, by the time it completes, takes us all the way down to about 125 and change. 125.10, 125.20. Now, if you look at the daily chart, that's just past the 200 DMA, which makes sense. You might overshoot the 200 DMA by a few pips before finding some support. So if you guys and gals are bullish sterling for whatever reason, just realize we've broken a bearish ascending channel, right? We've broken a bearish ascending channel. We have a bear flag pattern, and it's one of the only currencies that we adjust this bias chart every single morning. I do this analysis privately with our Forex Analytics subscribers. We identify all these key levels each and every day and why they are biased certain directions. It's really one of the majors that's really pointing towards dollar strength. Why? Because we've broken an ascending channel. We're in a bearish pattern, moving lower, and we closed in breakdown territory as well. So it's going to probably continue looking pretty bearish in the days ahead. So just heads up if you're trading sterling. Okay, moving right along. Thursday night, we're going to have yen, Tokyo core CPI. Keep an eye on the yen. I've talked about the yen in nauseum. Don't really need to go into it again. Friday, we have Canadian GDP, and we already talked about the Canadian, and we've talked also about the US dollar. We have US PCE, and then Chicago PMI, University of Michigan consumer sentiment coming in on Friday. And you guys already know my views on the US dollar index. So dollar index is just getting really close to resistance. We're at the 127% extension of this last leg lower. We're almost there basically. And above 106 opens up 106.25, above 106.25, and you're in straight up bullish territory. You start moving outside of this triangle, and then next thing you know, the dollar index is going to be doing something which for a lot of traders think is the unthinkable, right? It starts rallying pretty aggressively. Usually that is on the heels of some sort of risk aversion, going back to NVIDIA, semiconductors, and what's the rest of the equity markets doing. Now, I'm going to talk about the rest of the markets. I'm going to talk about the S&P, NASDAQ, Dow, Russell. I'm going to bring in Nick from Trading Analytix. I want to talk about gold, copper, crude, bonds, so don't go anywhere. But I do need to mention this. One of the best places to be is inside the Forex Analytics community. And a lot of people might say, well, what's so special about the Forex Analytics community? Well, first and foremost, not only do you have this tool, Forex Analytics of 30 different instruments, not just currencies. You have the S&P, you have boons, what's happening in the bond market, what's happening in crypto. You have 30 different instruments with several types of analysis, whether you're talking about basic technical analysis, macro analysis, harmonic analysis, Elliott wave analysis from Gregor Horvat, who happens to be in Germany right now. You've got a lot of different analysis types, live squawk, risk management tool, which I use pretty much every single day. You have a mobile app. You have patterns in play. You have options expiration information, live options pricing, so you can see what the 1 month volatility rate is for the euro and different currencies. You got the bias chart that we do every day. You got Twitter. You have all this great stuff, but more importantly, you have this community of traders that are from all over the world. And we're talking, and not just them, but you got myself and K-Man and Nick from Trading Analytics. You got us talking all day long in several different chat rooms. And you have situations like this, like HB, I'm going to read you this so you guys can see, right? HB said a couple of weeks ago, this is right at the end of the day on Friday. This is what, as everybody's watching the Euro Cup 2024. A couple of weeks ago on the week ahead video, you hinted at a possible inverse head and shoulder pattern that could form on the dollar Swiss when it was trading around. He mistyped those numbers, which is fine. And you said if we get the pair to drop, well, here we are, and the pair dropped and bounced right from the 50% retracement. He's asking me about that. So what did I do? Well, I said, oh yeah, oh, the dollar Swiss. Oh yeah, I was hoping the Swiss National Bank didn't cut, but yes, it is still possible. And he goes, yeah, of course, these are the risks, and we have conversations about the markets in the chat room like this. HB is just like you. He's a trader at home, actually working another job and trading at the same time. And hi HB, if you're watching this. And guys, this is what we do all day. So if you want to be in the best trading community out there, which is private, we don't talk religions, we don't talk politics. We try not to unless it affects the markets. And we just talk about the markets and sometimes a good Netflix show from time to time. So make sure you sign up for Forex Analytics. It's $1 for 10 days. Try it out. Download the mobile app and come in the community. You can get to the community right here. Right here. You can see it right next to your name. It says go to chat room. That's where the chat room's at. Okay. Continuing on. Let's talk about really quick gold. We need to discuss it. I'm gonna lump gold and copper together because I think, and silver, really fast. Gold, as you all know, and let's go over to a daily chart here. Gold remains in this range, very tight range, lower end of the range, upper end of the range, and if we sold off, that double top or range extension would take us down here to 2140. We're still in the middle of the range, nothing to do. Silver. This is, just so you guys can see, it's a bull flag pattern, right? And we keep rejecting, flag resistance. Doesn't mean it's bearish, but I would see how it reacts down to 50 DMA. Copper, though, should have your attention because the bounces are really shallow. I thought we'd get more aggressive rally coming off of this key support that we've talked about here on the week ahead video. I thought it would be way more aggressive. It isn't. And the fact that we're right by the support might suggest that the Aussie is closer to breaking down than breaking out. Just want you guys to hear me say that. Also, take a look at crude oil. Crude oil, crude stopped. Let me just show you really quick since I didn't have it up here. Remember, we use these week ahead charts just for this show. But you'll notice that we stopped at the 618 retracement, and then the 200 DMA and the 50 DMA are right here. Most recessions or a lot of recessions are triggered because of some sort of energy crisis. And in this case, when you have high inflation, if crude oil goes on a rampage higher, which many people believe it won't, but if it does, and we start spiking above in the mid 80s to the high 80s to maybe the 90s, that could be enough to trigger a potential recession. And look, I'm not expecting that right at the moment, but we can see what the upside targets would look like. And that would definitely send, in my opinion, the world economy into a recession as if you saw energy costs like that soar. All right, continuing on the bond market. I did blog about this week. So if you guys don't know where to find the blog, you just go to forexanalytics.com. Go to where it's the blog here, and then you'll see this chart of the day was the 10-year. I don't have to go into great detail. You can read the blog, but just know that we are up against major resistance. And if the bond market starts rallying, that should be a really big warning to what you're doing with risk appetite just in general. Okay, before I do a quick summation of what's happening in the S&P and the other markets to answer the question if this is going to be a bigger reversal or not, before I even do that, I want to bring in Nick from Trading Analytix. So with that being said, Nick, take it away. Here's 2 minutes with Nick.
Hello everybody, this is Nick Groves, your host here with Trading Analytix. Blake, thanks for giving me a few minutes here. So guys, let's point out the S&P. The S&P closed below channel support today. And you also note that the NASDAQ, let's take a look at the cash contract, also did so as well. This looks like a bit of a throwover. False breakouts do technically lead to breakdowns. Now that could take us somewhere back near 19,000 in the event that the NASDAQ wants to continue further south. For the S&P, I'm actually looking for around 5,400 as key support here. So 5,400 is a 38.2. Below there, we have this longer dated trend line support that's going to come in probably around the 50% retracement by the time we get there at 53.62. Now, just because we're seeing a little bit of weakness, I don't think that the market's just going to come under, a huge amount of pressure here. I do have an interesting stat that shows that the NASDAQ, the percentage of NASDAQ 100 peaks by month is typically July. So we're seeing our first little bit of weakness. I think it could just be rebid, but we have to dive into some of the big stocks, right? So let's take a look at NVIDIA. NVIDIA, it did close down on the week, I believe, down 4%. But in the event that it's going to get rebid, I'm looking at this 38.2 at 115. You'll note that it acted as resistance in May and then support in June. So I think that's the first level to be looking for. One other interesting development was Apple. Apple closed right on very key support. If you take a look at this daily chart, you'll note that Apple is on the verge of creating a false breakout if we move lower next week. So if we get a false breakout in Apple, where does the rest of the market go? And NVIDIA could continue south. I'm not entirely sure. When you take a look at the SOX index, this is the semis index, we did tag the 161% extension, and semis have been a huge driver. If you look at some of them individually outside NVIDIA, you'll note that SMCI came up and tagged the 618. If it closes below, call it 870 or so, that would be a false breakout of this pattern, and we'd be looking for a break below 780 or so, and I'm targeting closer to 600 for SMCI. AMD is also really close to some pretty key support. You'll know that this trend line dates back to October of 2023. We bounced on it in May, and we bounced again just last week. So if we begin to break 155 in AMD, things could get interesting, and I'm here to help highlight that with you. We do a lot of Twitter coverage on Trading Analytix with an X. I'm also going to be posting a week ahead video this weekend. So check us out. We'll be on Twitter and YouTube. Blake, so much for your time, and I'll be around. Hope you guys have a great week.
All right, Nick, thank you very much. I appreciate you giving us a quick update on the markets. And like I said, as promised, I'm going to talk just really quick about what's happening with the S&P as far as I can see. S&P, as you pointed out, we're hitting the 161% extension. We are still in a rising channel, and you can see it pretty clearly just like this. Okay. So because we're in a rising channel, I wouldn't get too worried about the market until you start getting back below, like, let's just say 5,300, 5290, somewhere here. But the way we have to do this is, instead of just being bearish stocks, take a look around. Take a look at what's happening in the NASDAQ. Take a look at what's happening in the Russell 2000. Is the Russell 2000, catching a bid, or is it, going to fulfill this this head and shoulder pattern and start moving lower? I would argue if the S&P is moving lower and the Russell's moving lower, you're going to have a broad market sell-off. Take a look at the NASDAQ 100. The NASDAQ, we haven't looked at it obviously in a long time here, but the NASDAQ 100, this amazing, amazing rally here. And so what I would be looking at is to see, is there going to be rotation out of this channel? There's a nice little channel that's being formed, and, maybe a throw over, would send us reeling in the other direction. So basically what I'm trying to say is focus on rotation. Do you see the S&P going down, but you see money coming back into the Nikkei or the DAX, which I'll come back and talk about the DAX in a bit. That's what you got to be looking for. When it's a broad-based sell-off, that's when you really start looking at the markets and saying, look, I think that we need to be really careful and maybe buy some dollars, maybe buy some bonds, maybe even buy some gold. Okay, so just a real quick view of what's happening there. Also, wait, one other thing I should mention really quick. Look at Bitcoin. We talked about Bitcoin here on our show, and we talked about Bitcoin and being trading pretty heavy. But let me just share with you what I'm a little fearful with Bitcoin here. And, we still might have this long-term cup and handle pattern. Maybe, I'm not going to disagree. We've discussed about the big cup and handle pattern, which, if you guys want to see what that looks like, just put it on a weekly chart. That might be a big cup and handle pattern potentially, but near term, that's a weekly, right? So on a 4-hour chart, what you're going to notice is we have, in my opinion, a range extension that we're currently playing into that really takes us back towards 62,000. So near term, you can see how Bitcoin looks like we're going to continue to grind lower, at least near term. Are there going to be some buyers that emerge below 60,000? I think so. But if you have, you know, the whole entire broad market going lower, you have crypto moving lower, you know, and you got the bond market rallying, you got the dollar rallying. Those are things that, you know, European stocks are coming down. Those are things you need to be looking at. All right. Okay. This is the stage or the part of the show where I'm going to talk about last week's setups, and then I'm going to give you my top 3 setups of this next week. So last week we talked about higher volatility. So the VIX, I made the case that the VIX is making higher highs, or excuse me, higher lows. And if you look at the VIX from last week, which we were right here at 12, a week later, we are higher at 13. So is volatility picking up and making a higher low? The answer to that question is yes. If you bought calls on VIX or you bought some sort of ETF, I'd call it a win because you're up for the week, and it's been really grinding higher since we opened, despite the rally to all-time highs in the S&P this week, earlier in the week. All right, next setup. So we got one. Okay, next setup. U.S. dollar, Japanese yen officially on the radar and short below channel support. Well, it never broke below channel support. Not even close. We just end up continuing higher. So am I still worried about channel support? Yes. Did it even get anywhere close? No. So was there any trade initiated? Shouldn't have been. So that one's nullified. So we had one that worked, one that's nullified. Number 3, I said sell IWM short or Russell 2000 last week. So let's pull up IWM because I don't have it up there. So Sunday or last week, here we are now, and we've moved lower. Even if you've been selling rallies all week, you've done well. So that one count? Yeah, and I gave you a bonus one last week. I said sell DAX on a rally to 18,250, if I'm not mistaken. You have to go back and listen. But I said sell rallies, bonus, sell DAX on a bounce, and I think I gave you the level of 18,250, and we really went to 18,265 and reversed. So that one is a win. So VIX win, dollar yen nullified, didn't happen. Sell IWM short, yeah, made a little bit. You call that a win. And DAX a win. So 3 wins, 1 didn't happen. Not bad. Okay, so what's up? What's in store for this week? So this week, I'm looking for a breakdown in the euro dollar ahead of the elections. Now, whether the euro sustains a breakdown, it solely depends on the election. So basically, what I'm looking for is I'm looking for the euro to break eventually 106.50. What happens the following week? Down, if we do break down, what happens down here is questionable. It's all about what happens in the election. So with these French elections, do we get a big fat left coalition that the market would worry about? Do we get a Le Pen substantial victory? There's a lot of different outcomes, but I'd be watching the spreads between French and German 10-years and seeing if the spreads continue to blow out, which they did at the end of the week this week. All right. So number 1, looking for a euro US dollar breakdown. And the way I would be thinking is, trying to get some sort of sell off higher and then sell below support. So I'm going to try to layer in a short in the euro dollar at some point this next week. Dollar yen. I'm I'm going to leave it open to 160 is really key. I want to see if 160 can hold, because if 160 holds, I am looking for a short sometime next week. If it holds, if it doesn't, and we just continue to break out, you know, you're watching that yen. It could potentially break out, but I'm looking for really more of a reversal as long as 160 holds, and I'm looking for a move back below like this 157.70 level. Okay. Last but not least is sterling. I think that the sterling is in breakdown territory, so I'm looking to sell any rally back to 126.80. So in other words, if I have to do it on an intraday basis, it's going to look something like this. If we get a rally like this, I'm going to look for a short. Okay. So those are the three setups this week. Looking for euro dollar short, dollar yen. As long as 160 holds, I might look for a reversal going the other direction, and selling sterling on any rally to 126.80 or so, which would be somewhere in this vicinity. So guys, gals, if you found this this show and this week ahead video, if you found it beneficial for you, thumbs up would be great. It's free to subscribe to these channels. Also, make sure you jump down in the comments below in case I missed something, which I probably did, because it's Saturday morning and I tend to miss things. So if I missed anything, jump down below. And also, if you want to, if you have a question for me, I read the comments. So I will see you on the Monday morning face show. Have a great remainder of your weekend. My name is Blake Morrow. I'm out of here. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.